Welcome back to Investing and Trading Live, sponsored by Online Trading Academy. My name is Josh Lilquist, and on that last segment, we were talking about different strategies that are designed for income because we're seeing a lot of people that, doing really well in the markets, want to build more for their future, which we'll talk about in this segment, but they want to do that on top of their job. Having a job during the day, allowing them to do that in the evening requires a 24-hour market, but also by being efficient with your capital by using leverage. There's different strategies and techniques to do that. And we actually discussed that in these investing classes here locally. Just simply text the word investing right now to the number 210 for 2 seats for that investing class. And when you come in, you're going to receive that jumbo pack. Now, what's in that jumbo pack is going to be some different strategies that are designed for income. Also, some different OTA picks in there, some opportunities that show our supply and demand strategy, and also to help you get started right away. Where do you start? How do you do that? And what might be the best opportunities designed for you, not your neighbor? So text the word investing to the number 210, right meow. Yes, Al, I did say right meow. Remember that? Remember that from that movie?
That's so cute.
I think that was from Super Troopers, wasn't it?
I missed that one too, Josh.
And he goes, "Did you say meow?" I don't know. Anyway, we could talk about movies all day. I have a lot of movie quotes. We could continue that, but this is a financial show. So, Al, in this segment here, and I wanted to talk about some different strategies that are designed to build that wealth bucket. Now, we talked about in that last segment, people are looking for income strategies for several different reasons, but it takes extra income to build that wealth bucket. So I'm glad we discussed that part of it in the first segment, or in that last segment. Now here, I want you to break down a little bit more. What are some of the techniques that, and I know you show a lot of this in the investing class, but what are some of the techniques that you're seeing a lot of people want to learn that have really good retirement accounts? Some people they feel they have enough. They may have 2, 3, 4, 500,000, but then they're really looking at it and they're saying, oh gosh darn it,
Yeah.
we're not going to have enough. So they're looking for different strategies to continue to build that during retirement. So what do you help people with to be able to do that?
Well, first of all, people are living longer these days. You may live 30, 40 years after you retire, which is obviously going to require a lot of extra money to be able to do that. And a lot of people that are coming in are looking at their 401ks and they're saying, you know what, I thought that number looked pretty good, but now I'm thinking about how it has to last for more years than I thought it might. We none of us know for sure how many years we will have in retirement.
Yeah, it's that psychological thing. People think if they have 100,000, that's why we mentioned the word six figures earlier, because people think that's a lot of money, but it's not anymore. So people that have 100, 200, in the past, they thought that was really good. And then now it's not, so they need to build more.
Yeah, in that 200, that's not an average. The average is closer to about 89,000 that people have. But
Yeah, it
even if
is.
you have several 100,000, it looks like a nice number, a big number. But think about this. If let's say you're going to live 40 years in retirement, you're planning for 40 years, and you want to live on $4,000 a month, okay? And that's not a huge amount when you think about the cost of a home, of a mortgage or rent and insurance and all of those things. That's probably pretty close to break even. But at 4,000 a month, if you want that and you want to have that last for 40 years, if you look at maybe 3% inflation, rate of inflation of 3%, getting 6% on your investments, you need closer to $4 million to be able to do that.
Yeah,
And I think that's a number that a lot of people are going, oh my gosh, that's a lot more than I thought. Even
yeah. Well,
when
just breaking it down even simpler, that's almost $50,000 a year that they're spending.
yep.
So if say someone has 200,000, that's going to last them 2 years without any growth. Think about a down market.
Well, and that I'm glad you mentioned that word growth, because what we look at in a retirement account, the most important thing isn't necessarily how much you have there. There's three components to your retirement account that you should concentrate on. Number one is protection. So whatever, let's say you've got that 200,000 or 300,000, what would you do, or how would you feel if the year you retired, it was followed by a 50% drawdown in the market? And if you started with 300,000 and now you only have 150,000, or you started with 200 and now you only have 100,000, is that going to impact how you live? Well, absolutely. So you have to protect that money. Once you've worked hard for that, don't let it end up in somebody else's account.
Here's the challenge, though, Al. A lot of people that are kind of trying to retire now, maybe they didn't experience that in the past, so that what they're going to say is, "Oh, that won't happen. I'll
Right.
be okay." But then when they get to that time, they're like, "Oh gosh darn it! I
Yeah.
wish we had have done something different."
Well, and here's the bottom line, Josh, and I think this is the honest truth is that most people don't want to think about retirement,
Hmm.
don't want to think about what they need to have until it, for many people, it's too late.
Yeah. What
And
if somebody wanted to build that account while they're retired? Is there option strategies
well,
to kind of take pieces of that, not the whole thing,
yeah.
but be comfortable and take small amounts of it?
Well, and that gets down to I didn't finish the three components of your retirement. One is protection. The other is not necessarily the size of it, but it's how you generate income off of it,
Okay.
and that's what's important. How much income are you going to need or want to have to live the lifestyle that you want? And then the third component is growth. Continue to grow those assets, and the way Wall Street has conditioned us over the years is when you go into retirement or you get close to retirement, then become very conservative. Maybe go from a stock portfolio, or the majority of your assets in a stock portfolio, rotate that into the majority in some kind of a fixed income portfolio. Over the last few years, that has been a losing proposition.
Yep.
But you don't have to take on a lot of risk. In fact, the number one thing that we teach our students, regardless of whether you are young and investing for income or you're on in your years and you're looking for just dealing with your retirement accounts, it's that risk strategy, risk management that's important. But what are the assets you can use? Well, the income assets that we teach our students that Wall Street uses, by the way, on a regular basis, but they don't necessarily, in most cases, don't want you to know about them. They kind of keep it to themselves. Those are the assets and the strategies we talk about to generate income. They're the same strategies you can use in retirement. And you mentioned options, and there's two ways of looking at options. One is choices. Looking at options is just being a lot of choices, but there's also an asset called options. There's an options market that allows you to do a number of things. It allows you to participate in the movement of an asset that might be too pricey for you to actually buy yourself. But with an option, you can participate in the movement of the stock of that particular company or that asset with a smaller amount of money. That's leverage. You can use leverage with options. Options can be used as a protective vehicle. Look at it like an insurance policy on your portfolio. You can use options to grow a portfolio that you have without ever selling a share of it. Even if you're looking at dividends, you can boost the dividend returns using options. So there's a number of things that we talk about that in these classes. A lot of people, when they hear words like options or futures, the futures market or the foreign exchange market, they go, "I'm not going to get involved with that because it's too risky." Well, it's not if you know how to control risk, and it's not as the way you think it is because that's what you have been conditioned to believe. Wall Street wants you to think that you can't do it. There's too much risk. It needs too much money. They want you to need them, and that's what they're counting on. That's where a lot of their profit comes from fees that they charge you as a client. And one of the reasons that they're not bringing up these assets that we're talking about is because of the short-term nature. If a financial advisor, I think I've mentioned this numerous times, a financial advisor might have several hundred clients. Maybe you've got 300-400 clients. You can't possibly deal with short-term trades for 300 or 400 people. The go-to is to put you in something that they will convince you should hold on to for decades. Don't worry about crashes. Don't worry about corrections. And 10, 20, 30 years, you'll be okay. Well, as you're moving into your 60s and 70s, 10, 20, 30 years down the road, maybe just to get back what you lost yesterday is not a very attractive thought.
Yeah, I like how you brought some of those different things up there. And one thing to note here, just you mentioned, people don't want to get into something because they hear or they feel, oh, it's too risky, right? Well, as you mentioned, we train people how to minimize that risk. And a good example is I grew up in a small town, and I
Mhm.
remember my sister was learning how to drive, and she's, oh, I can't go on that highway. It's too risky. It's too risky. So what do we teach her? Just follow the speed limit. Stay the speed limit. Put your seatbelt on.
Sure.
Look both ways before you get on the highway, and all that stuff to minimize your risk. And then now she's cruising along Highway 94. Just cruising along, no big deal. They call it the big red road, right? So That's one of the things we want to do in the financial market is remove that emotion of fear or greed to make you comfortable to make your educated decisions in the financial markets, especially in retirement accounts, because that's what you work so hard for. So be comfortable, confident, but you got to get started to learn how to do that. And how do you get started is these investing classes to introduce you to these concepts, techniques, and how to remove emotion and having the right strategy for up and down markets in your retirement account. So text the word investing to the number 210 for 2 seats for the investing class here locally. Text investing to the number 210 for 2 seats to get started. When you receive that, when you get set up, you're going to have a jumbo pack that you're going to receive when you come into these classes. Coming up next, we're thinking of something great, and I'm going to give it to you right now. We're going to inspire you to get started.
There you go.
Coming up next. This is Josh and Al, Investing and Trading Live. We will be right back.